anticipation builds for what 2025 holds for ETF investors. The past year has been marked by significant market growth, leading to considerable gains for many. Several key factors are expected to heavily influence ETFs and investing strategies in 2025. These include decisions by the Federal Reserve, such as interest rate cuts under Jerome Powell, declining U.S. inflation, post-election developments, and the possibility of a looming recession. To help navigate these dynamics, I'll share 5 top ETFs to consider for 2025. Let's dive in. First is AVUV, the Avantis U.S. Small Cap Value ETF. Historically, after interest rate cuts, stocks across all market caps see growth, with small caps often outperforming due to their dependence on external financing. Rate cuts directly reduce borrowing costs, enabling small-cap companies to grow and expand at a faster pace. AVUV invests in a diverse array of high-quality small-cap stocks with an expense ratio of 0.25%, a B+ rating from Seeking Alpha, and a dividend yield of about 1.5%. Its holdings span sectors such as financials, industrials, consumer discretionary, energy, and materials, featuring companies like Medifast, Alaska Air Group, JB Hunt, Mueller Industries, and SM Energy. Over the past 5 years, the ETF has delivered nearly 15% annual returns and is well-positioned for another strong performance in 2025 with anticipated rate cuts. Next is IBIT, the iShares Bitcoin Trust ETF, offering investors an accessible way to invest in Bitcoin without the complexities of cold storage wallets or crypto trading platforms. With an expense ratio of 1.2%, IBIT stands out as a cost-effective option compared to its competitors. Over the past year, it has achieved nearly 100% returns, and with Bitcoin's historical resilience, it could see further growth, especially if Donald Trump fulfills his promise to make the U.S. a crypto hub. Post-election, a significant influx of investor capital has flowed into Bitcoin. Given the high-risk, high-reward nature of cryptocurrency, it's advisable to limit exposure to a small portion of a diversified portfolio, no more than 2.5%, with a maximum of 5% of overall net worth. The third ETF category to consider includes broad market ETFs, which offer a comprehensive approach to diversification. These funds encompass a wide range of sectors and can hold hundreds or even thousands of stocks, providing stable and balanced returns for your portfolio. Some of the best broad market ETFs include VOO by Vanguard, SPLG by SPDR, VTI by Vanguard. There are several other excellent ETFs and mutual funds in this category, but these stand out for their performance and reliability. VOO tracks the S&P 500, providing exposure to 500 of the largest companies in the U.S. economy. With an expense ratio of 0.03%, an A+ rating from Seeking Alpha, and a dividend yield of around 1.2%, it offers excellent diversification across sectors like technology, financials, healthcare, consumer discretionary, and communication services. Its top holdings include major players like Apple, Nvidia, Microsoft, Amazon, and Meta. VOO has delivered consistent returns, averaging nearly 13% annually over the past decade and over 15% annually in the last 5 years. While predicting which stocks, ETFs, or sectors will perform best in 2025 is impossible, investing in a broad market ETF like VOO reduces stress and research while offering a solid chance for profit in the upcoming year. Another important category to consider is growth ETFs. These ETFs focus on companies with high potential for above-average growth, often resulting in exceptional returns and market outperformance. However, they are also more volatile, making them a higher-risk, higher-reward investment. Some standout growth ETFs include SCHD by Charles Schwab, SMH by VanEck, QQQM by Invesco, and VGT by Vanguard. Each offers unique opportunities for significant future returns. SCHD Schwab's U.S. Large Cap Growth ETF has an expense ratio of 0.04%, an A+ rating from Seeking Alpha, and a dividend yield of approximately 0.4%. It focuses on growth-driven sectors such as technology, communication services, consumer discretionary, healthcare, and financials. Its top holdings include NVIDIA, Apple, Microsoft, Amazon, and Meta. Over the last decade, SCHD has achieved over 16% annualized gains, with even stronger performance of over 19% annually in the last 5 years. If the market grows significantly in 2025, SCHD is well positioned to capitalize on that momentum. The next category, dividend ETFs, is perfect for those seeking passive income or living off dividends. Dividend ETFs invest in a diverse range of dividend-paying stocks, offering stability and consistent income. Top dividend ETFs include SCHD by Charles Schwab, DGRO by iShares, FDVV by Fidelity, and JEPI by JP Morgan. My favorite is SCHD due to its strong diversification and long-term stability. The U.S. Dividend Equity ETF by Charles Schwab remains an excellent choice for investors focused on building wealth and income over time. SCHD has an expense ratio of 0.06%, an A+ rating from Seeking Alpha, and a strong dividend yield of about 3.4%. What I like about SCHD is its balanced approach, avoiding a heavy concentration in technology stocks. Instead, it focuses on sectors such as financials, healthcare, consumer staples, industrials, and energy. Its top holdings include BlackRock, Bristol-Myers Squibb, Cisco Systems, Chevron, and Home Depot. SCHD is often regarded as the king of dividend ETFs due to its exceptional performance. It has delivered over 11% annualized returns over the past 10 years and more than 12% annually over the past 5 years. For those uncertain about the market's direction or concerned about a potential recession, dividend ETFs like SCHD provide a reliable option. With their high dividend yields, they offer a consistent source of returns, even during volatile times. The stocks in dividend ETFs tend to be from companies with strong cash flows and solid long-term earnings, making them a dependable choice. If you reinvest dividends and hold long-term, dividend ETFs can be a powerful tool for building wealth. So, there you have it. 5 of the best ETFs to invest in for 2025. Small caps, Bitcoin or crypto, broad market ETFs, growth ETFs, and dividend ETFs. If you found this helpful, don't forget to like the video. Wishing you continued success in the stock market, take it easy, and peace.